sales revenue of the firm and coming to the earning per share. That is the income statement. So let us start. So we start with the sales, which is 1.6 CR less the, okay, there is no variable cost given. Else this is how it is given, variable cost. Then you have the contribution minus the fixed cost gives you the EBIT. Okay, and after this you get your EPS when you divide the earnings available to equity shareholders by the number of equity shares. So please try completing this statement with the information given to you. So since you are not given the variable cost, you can take the contribution at the same amount. Then no, you cannot take the contribution because there will be some variable cost. So I am leaving the value of contribution for the time being. You are given fixed cost as 50 lakh and then EBIT as 10% of sales. So which means this is 16 lakh. So now you can get the value of contribution, which will be 66 lakh. So we are working backward to get the value of contribution, which will be EBIT plus the fixed cost. And then again, using the value of contribution, you can get the value of variable cost, which will be 94 lakh. Yes, only then will you get 1,60,000. So this value becomes 94 lakh. Okay. After that, you are given the interest. Interest will be on your debentures, 20 lakh debentures. The value is 20 lakh. The rate of interest is 12%. So 2,40,000 will be the interest. So 13,60,000 will be your earnings before taxes. Now you can proceed. After that, you are given the tax rate to be 40%. So 13,60,000 will be 5,44,000. So please check the calculation also once that you're getting the same value. So this is the first part, which is the income statement, and you get an earning per share of rupees 1.29. After that, please calculate the operating leverage and financial leverage. Everything is there before you. Just tell me the answers. So how much is degree of operating leverage and degree of financial leverage coming to? Financial leverage is 1.86. I'll also check the answer. Yes, this is correct. 1.86. And operating leverage, very high, 4.125. Yes. Okay, so you see that the company has very high operating leverage, which means that the fixed operating costs are very high, and as that is clear from the income statement also. It is 50 lakh. The fixed cost is 50 lakh, and that is the reason that the operating leverage is very high. The financial leverage is 1.86. Now the last part of the question is asking you what will be the percentage change in EPS if EBIT rises by 10%. What will be the new EPS? Now, out of the three leverages, which leverage is checking or examining the relationship between EPS and EBIT? Out of the three leverages which we have done, which is the leverage which sees the relationship between EBIT and EPS class? Yes. Is it operating leverage, financial leverage, or combined leverage? Yes, Unnati, you are absolutely right. It is the financial leverage which is examining the relationship between EPS and EBIT. So we will use the financial leverage to solve this part of the question. If there is a 10% increase in EBIT, so the percentage change in EBIT is 10%. So I'll just move to a new page. Your degree of financial leverage is percentage change in EPS upon percentage change in EBIT. Now, financial leverage we have already calculated as 1.29. This is what we do not know. And this is 10%. Okay, so what is the percentage change in EPS coming to? So this becomes a 12, sorry, yes, it becomes 12.9%. Your EPS is increasing because this is a positive value, so it is increasing by 12.9%. Now you can calculate the new value of EPS. Your earlier EPS is 1.29. So the old EPS is 1.29. Now you can add 12.9% and you'll get the new EPS. So this will give you the new EPS. It's coming to 17.93. New EPS is 1.53 आ रहा है. Have I taken the correct value of EPS? It is 1.86. I'm sorry, idhar one corrected also. Financial leverage is 1.86. I've taken this as 1.29. So this will be 18.6%. अब चेक करना कितनी वैल्यू आ रही है. It's coming to 1.53 approximately. Yeah, sure. I will move back to the last page. This one, okay, so your financial leverage was 1.86, and when you add a 18.6% increase, you get your new EPS as 1.53. Now, this is one way of solving. If you want, you can add 10% in your income statement and you make a change here. This will be 16 lakh. 10% will be 16,000. Sorry, 1,60,000. So make this EBIT as 17,60,000. Then continue with the income statement. You will get the same answer as 1.53. So it is better if you change in the EPS directly. Else, if there is any confusion, then you can make the change here and then continue with the income statement. Your EBIT will increase by 1,60,000. This is the last page of the solution. So third part, this is how you will be solving. Okay. Any doubt, any problem you can ask. Let's move further.
मैम DSL बता दो एक बार कैलकुलेशन.
एक मिनट बेटा. डिग्री ऑफ फाइनेंशियल लीवरेज जो आपका है वो होता है EBIT अपॉन EBT. अगर आपका कैपिटल स्ट्रक्चर में सिर्फ इक्विटी शेयर्स और डिबेंचर्स होते हैं. व्हेन यू हैव बोथ इक्विटी शेयर्स, डिबेंचर्स and preference shares, then your formula becomes this one. Highlight. This is EBIT upon EBT, which is profit before tax, minus preference dividend, divided by 1 minus tax. PD upon 1 minus T, we have taken this term because preference dividend is not tax deductible. Okay, so you are taking the amount of preference dividend after tax, that is adjusted in the formula. Okay, so degree of financial leverage में जो आपका EBT है उसकी वैल्यू EBT is 13,60,000 minus 3 lakh divided by 1 minus 0.40, 0.60 से divide करोगे, you will get the answer as 1.86. ध्रुव एक बारी solve करो, you will get the answer.
Okay, ma'am, solving.
Okay. Okay, any other doubt? We come to the next question. So let's take this question. We're given the capital structure of a company which is consisting of equity share capital of 10 lakh and 10 lakh of 10% debentures. The unit sales increased by 20% from 1 lakh units to 1 lakh 20,000 units, and then you are given the selling price, variable cost, fixed expenses. You have to calculate the operating leverage and financial leverage at both the levels of sales. Please start solving the question. Prepare a financial statement. Calculate the earning per share under both the sales unit volume, 1 lakh units and 1 lakh 20,000, and then the financial and operating leverage. To calculate EPS under both the volumes of sale, Yes, so the profit after tax in first case is coming to 6.5, and for the second case it will be 11.7. Okay. Income tax will be included where, Garima? You will be deducting tax in both the cases. So A part says what is the percentage increase in EPS. ठीक है. Percentage increase in EPS will be the change, which is 5.2 upon 6.5 into 100. 5.2 divided by 6.5. This is giving you an 80% increase in EPS with a 20% change in sales volume. So the firm is using fixed operating cost and fixed financial cost, and through that it is getting 80% increase in the EPS. So degree of operating leverage and financial leverage is very high for the firm. That is why with a 20% increase in sales volume, the EPS is increasing by 80%. Okay, so the next two parts of main part A, and then the second question, comment on the behavior. Please complete these parts. You have to simply put in the values in the formula for financial leverage and operating leverage. And as you can see, both the leverages will be increasing, and they'll be increasing more than proportionately, because only then are you getting an 80% increase in EPS.